2018, we have delivered a fourth consecutive year of record profits, with our net fee income and adjusted profit before tax both up by 4%. We've also seen a reduction in our net debt, with that down to 17.1 million sterling. And with the performance in the year, with the strength of our balance sheet, and in line with our progressive dividend policy, we're proposing an increased dividend of 52%, up to 2p. Across our group, we've seen 3 out of 4 regions deliver operating profit growth, those being the UK, Asia Pacific and Americas. In particular, we've seen some strong results from IMS, our brand operating in offshore recruitment services in India, where they've delivered 50% growth in net fee income and opened a second office in Jaipur. So we're now operating from 2 separate locations in that country. LMA in professional services successfully integrated their insurance business. And in Chile, our Alternattiva brand has driven extra scale and depth across its service lines. In Console Partners, in technology sector, we've seen strong growth, in particular in the US market. And in Wreford Aviation, the investments that we made in 2017 have come through as we expected this year. As a diversified group, the strong performances we've seen are able to offset the challenges that we've faced in Germany and Japan from the changes in regulations that we'd previously highlighted. Now, those changes have been fully absorbed within the business. Although we're starting 2019 with a lower level of temporary workers than in the previous year, we're very confident about our prospects in those countries. They remain good markets to be in.
We are pleased to present a positive set of results for 2018. We have invested in the business and are continuing to deliver on our strategy. In 2018, net fee income was up 4% and up 6% in constant currency. Adjusted operating profit was up 6%, but with high interest charges on our tax liabilities, adjusted profit before tax was up 4%. Adjusted diluted earnings per share was down slightly to 12.1 pence. This was due to profit mix, with a greater share coming from those businesses with a higher non-controlling interest. However, we saw this gap close in the second half. Cash flow continues to be strong, up to 6.7 million. This has allowed us to reduce adjusted net debt by 2.4 million, invest in the central team, bring Grupo Solimano into the group, increase the dividend and return £500,000 to shareholders through a share buyback programme. Our debt to debtors ratio has reduced to 36% from 45% last year. We continue to have good levels of headroom within our facilities and our covenants.
Empresaria is an ambitious group, and we've delivered profitable growth while still investing in the business. We are diversified and we're decentralized, with our managing directors of the brands operating to run their business on a day-to-day basis without being micromanaged from the center. And that's a really important part of our DNA, and that's going to stay with our business. But what we have seen is the need to work more closely with our brands to support them and help them to deliver on their growth plans. And that's the reason why we've made the investment in the central team over the last year, in particular with the hiring of Rona Driggs coming in as Chief Operating Officer in November 2018. She has a huge wealth of experience operating in the staffing sector, having had nearly 30 years working in the US, and she brings that knowledge to all of our group companies. When we look at our strategic priorities, there are 2 main areas. Firstly, it's looking at how we can drive scale and growth and size in our existing sectors, and that's by focusing on our leading brands and developing those. Secondly, it's about improving our productivity, and that's the focus of looking at technology to automate processes and make our consultants more effective. It's implementing a learning and development culture to ensure that we've got continuous training of our staff. And it's also investing in marketing to make sure that we're using social media and other marketing channels to effectively engage with our candidates and our clients. As a strategy, we're continuing to look at organic growth supplemented by external investments. And when we look at some of the things that have happened over the last year, we've had Console Partners setting up a new brand, Forward Talent, to target different IT sectors. Our Become brand in creative and digital sector has opened 2 new offices, one in Brisbane, Australia, and the second in Auckland, New Zealand. And also back in July 2018, we finalised our investment in Grupo Solimano in Peru, which has strengthened our position in the high potential Latin American market. We're confident about our prospects for the future. We have a strong platform in place and also the management team in place to deliver the next phase of growth. We've invested in the business and we expect those investments to generate returns over the next few years. If we look at the market, the conditions are positive in that there are a lot of talent shortages across our key sectors, and that means that clients need our help to find the best talent in the market. The economic forecasts are generally showing positive growth, albeit we've seen weakening of those forecasts over the last few weeks and months, in particular in the UK and Germany. No doubt some of that is coming through from the continued uncertainty over Brexit. We see the political risks being the biggest threat to economic forecasts, but with our diversified business operating in 21 countries and with 20 brands, we have a natural hedge against any particular slowdown in any market. We have a clear and focused strategy. With the investments that we've made, the central team that we have in place, and the quality of the brands across our group, I'm very confident in our ability to generate profitable returns.